All right, week in review. So major U.S. equity indexes declined last week, with the S&P 500 falling 2.58%, the Nasdaq losing 2.45%, and the Dow Jones dropping 2.43%. The 30-year U.S. Treasury yield spiked above 5%, its highest level since 2023. Yields on shorter dated U.S. Treasuries also rose, putting pressure on bond prices. As a result, the aggregate bond index, the AGG, fell 0.45%. The U.S. dollar weakened against a basket of major currencies and is now down nearly 9% year to date, 9%. Meanwhile, gold surged approximately 6% last week, extending its strong year-to-date gains. It is shortened trading week in the U.S. markets this week as we were closed yesterday in observation of Memorial Day. Let's talk about economic releases upcoming. So key economic data this week includes the second estimate of first quarter 2025 GDP, scheduled for Thursday, May 29th. This will be followed by the release of personal consumption expenditures, or PCEs. This price index will be released on Friday, May 30th, offering fresh insight into the trajectory of inflation. Let's talk market outlook. Last week, House passed a tax bill titled One Big Beautiful Bill, which extends expiring tax cuts and introduces some new ones. The legislation now moves to the Senate for debate and potential approval. The bill renewed investor concerns over the growing U.S. budget deficit and our rising national debt, contributing to declines across stocks, bonds, and the U.S. dollar. Now, additionally, fresh tariff threats reminded investors that trade uncertainty is a key issue for markets. The administration postponed a 50% tariff on the European Union and 25% tariff on Apple for smartphones manufactured outside of the U.S. later last week. Over the weekend, the newly proposed 50% levy on the EU was postponed until July 9th. Of this, in the week ahead, investors will closely monitor any developments on trade negotiations and await fresh inflation data on Friday. Let's talk stocks in the news. So PANW Palo Alto Networks, the cybersecurity leader, reported earnings and revenue that exceeded expectations but fell short on their gross margins. Shares declined 3.89% for the week. Then we got TGT, or Target. The troubled retailer reported earnings last week and lowered its full-year sales outlook, citing tariff pressure and reduced store activity. Tariffs linked to controversy surrounding its DEI policies, and their shares fell 3.78% last week. That's your week in review. I'll see you next time.